Investors and traders, welcome to the channel. Today we'll be taking a look at the situation developing at the regional banks or small banks in the United States due to the fiasco which happened with the Silicon Valley Bank, which is no longer functional. So we'll also take a look at smaller banks because there could be stress in those as well. Okay, so this is the weekly chart of the now defunct bank, the Silicon Valley Bank. And what is really interesting to see is that, back in November of 2021, the stock was trading about $762, nearly $800. And look, the bank has gone bankrupt now. So a lot has changed in, quite a short amount of time, the 18 months. For example, so we have been looking at the broader indices, and I've been discussing about the situation in the bond market and how that has been influencing the stock market because the shorter end has really gone up in yield compared to the longer end. So that's the long bond, the 30-year bond, and that is a yield curve inversion, which usually precedes recessions, and it really is not a healthy indicator of the economy. So this is what this chart now looks like. So this is where the price closed on Friday on $106.04, and I don't know what's going to happen with the bank now. Probably some bigger bank might come and purchase it. Going back to the history of Lehman Brothers, and then Bear Stearns was a classic example. It was bought up by JP Morgan, pennies on the dollar. And then we also had the Washington Mutual on the West Coast, bought on the pennies by some bigger bank. So we'll have to see. Anyway, so let's take a look at the banking index for the smaller banks. So what we're looking at is the weekly chart for the regional banks. So this is the Spider S&P Regional Bank ETF. Disclaimer, this video is for educational purposes only and it is not a financial advice. So what we are looking at is basically this is an ETF for smaller banks. Those are the regional banks. And what we can see based on the price action is that it has been moving lower since the beginning of January 2022. So it's been a little over a year. This means that there is stress in this market. Now, what is interesting to see is that just doing a retracement, running a retracement, Fibonacci retracement from the COVID lows. So I'm just gonna mark this. These are the the COVID crash, so to speak, here. And then what we have now here going on is the SVB crash. Here what is also something interesting to watch is from a pattern recognition perspective. Although the price is moving lower, the price is also moving closer to a really good support level. Now that might just be a support where the price begin to stabilize a little bit, might go sideways to upward. Whether that support is going to hold over longer term, I do not know. For now, what we are looking at is we have got a pattern formation with the ABCD and 61.8% Fibonacci retracement coming between $47 and around $46. So that's the possible support. So I'm just gonna put possible support with a question mark here, because the kind of weekly candle that we have seen, it's a really strong candle, and I'm not sure whether this support might hold, but it is reaching a level where we should pay attention to that level because of the pattern formation. And it'll be interesting to see how the market behave when it reaches these levels. So this is what we're watching in smaller banks. Thank you very much for watching the video. Good luck and good trading.